Hello everyone. I'm sharing a statistical, rules-driven approach to trading New York morning price action in Nasdaq Futures. All times are New York time. What statistical time ranges are? Statistical time ranges are the high and the low made inside fixed time windows. For example, the 9:30 to 9:40 statistical range is the highest high and lowest low printed during those 10 minutes after the open. In this model, a break means a 5-minute candle closes beyond the range high or the range low. Intrabar wicks do not count. All probabilities mentioned are based on the last 5 years of NQ futures data. These time-boxed ranges act as anchors for direction and risk. Key ranges. Entry statistical ranges, 9:30 to 9:40 and 9:30 to 9:45. Hourly statistical range, 9 o'clock to 10 o'clock. What the stats show. 1. 9:30 to 9:40, first 10 minutes. If this range breaks on a 5-minute close, there is a 78% chance the opposite side of the range will not break until 11 o'clock. 2. 9:30 to 9:45, first 15 minutes. If this range's high breaks after the first 10-minute window forms, the chance of the opposite side not breaking rises to 82%. This gives additional confluence. 3. 9 to 10 o'clock, hourly. Breaking the hourly statistical range shows about an 80% chance the opposite side of the hourly range will not break until 2 o'clock in the afternoon. This is the strongest confirmation. It is ideal to add, scale, or re-enter on a retracement toward the hourly range after this break. Important note on probabilities. These probabilities are not about price moving in the direction of the break. They are about the opposite side of the range not breaking within the stated time window. That is why entering early, near the protected side, is important. Directional confluence. Across the sample, the 10-minute, 15-minute, and 1-hour statistical time ranges often align in the same direction. When they point the same way, they provide clear directional confluence for the morning move. Execution concept. Wait for the first 5 minutes to form, then plan entries aligned with the highest probability breaks. If there is a clean bullish reaction early, enter as close as possible to the expected range low of the 10 and 15-minute windows. If the 10-minute high breaks, you have about 78% protection on the low until 11 o'clock. If the 15-minute high breaks, that rises to about 82%. If the hourly range breaks, expect that the opposite side of that hourly range will not break until 2 o'clock. Look to add, scale, or re-enter on a retracement toward the hourly range after the break. We are not chasing a breakout candle. We are positioning early, placing the stop beyond the statistically protected side, and adding only after the larger range confirms the bias. If price stays inside the 10-minute high and low for 15 to 20 minutes, the probabilities remain valid once a proper 5-minute break occurs. Core idea. Early entries aligned with the 10-minute and 15-minute statistical time ranges, and then confirmed by the hourly range, create a mechanical, statistically proven framework for confident positioning in the New York session. When all three ranges align in the same direction, that alignment strengthens the bias through directional confluence. First 30 minutes, reversal versus continuation. In the first 10 minutes after the open, focus on how price behaves around your chosen point of interest. If that area is traded through firmly in the opposite direction, treat it as a reversal and plan in the new direction, still using the range structure. If that area holds in line with strong pre-market momentum, treat it as continuation and position with the prevailing trend, using the range edges for location and risk. 10 o'clock PO3 and the 4-hour structure. 2 4-hour candles cover the morning. One starts at 6 o'clock, and the next starts at 10 o'clock and ends at 2 o'clock. The 9 to 10 hourly statistical range often guides the 10 o'clock candle. If price breaks above the 9 to 10 hourly range, the hourly low often acts like the projected low for the 10 to 2 window. If a wick forms on the 10 o'clock candle, it usually forms between the 10 o'clock open and the hourly range boundary. We can use the 9 to 10 range to capture the 10 o'clock PO3 manipulation. The manipulation is simply a retracement back toward the hourly range. This is not a primary entry, because we aim to be positioned before 10 o'clock. Use this move mainly for re-entry or scaling when price pulls back toward the hourly range after the break. Why trading 10 o'clock PO3 is not primary. Price often trends strongly into 10 o'clock, so there may be little clean retracement to trade, or price chops near the hourly boundary, making execution tricky. Prioritize entries in the first 10 to 15 minutes. Treat 10 o'clock as a tactical point to add on a retracement toward the hourly range after the break. Failure scenarios. 1 wrong read on the initial move. Because entries are planned before a confirmed break of the 10 or 15-minute range, a misread can happen. If price hits the stop and then breaks the opposite side of the range, accept it and switch to the new direction. Prefer a retracement entry back toward the broken range boundary or your clear point of interest rather than chasing. Only consider pre-entry inside the range if clear price action is seen. For example, a clean reaction, a decisive rejection, or an obvious intraday shift in structure, and use reduced risk. If neither side has broken after the stopout and there is no clear signal, stay flat and wait for the break. 2 double break of the initial range. Sometimes price breaks one side of the initial range and later breaks the other side. This is less than 18% across 5 years. It invalidates the initial plan. Shift to the hourly range. If the hourly range breaks, plan from within that hourly band. Prefer retracement entries toward the hourly boundary with refined locations such as 1/4 and 1/2 retracements, ideally with higher timeframe standard deviation confluence. If price runs far after the hourly break without a pullback, it is often best to stand aside for the day. Statistical AM session flow. After the first 5 minutes, price often sets a directional bias inside the 10-minute range. A confirmed 10-minute break often leads to one-sided action through 11 o'clock, with the opposite side not breaking. When the 15-minute range then breaks in the same direction, that path tends to continue with fewer deep pullbacks into the protected side. Breaking the hourly range defines the main morning leg. Into the 10 to 2 window, the opposite side of the hourly range usually does not break. If a manipulation wick appears around 10 o'clock, it usually forms between the 10 o'clock open and the hourly range boundary before the trend continues. Tools you can use. Standard deviation bands on daily, hourly, and 4-hour to frame context and likely reaction zones. VWAP for intraday confluence on pullbacks, retests, and momentum checks. Final note. Follow strict risk management. The stop belongs just beyond the statistically protected side of the active range. The edge comes from early entries near the protected boundary, confirmation through the 15-minute and hourly breaks, and adds only when the hourly range has broken, preferably on a retracement toward that hourly boundary. This keeps you positioned before the 10 o'clock move and lets you use the 10 o'clock behavior mainly for re-entries or scaling when it aligns.
You